Yeah, so I always tell people when you're making a lot of money and you're self-employed, and when I say that, you're making like two, three, four, $500,000 a year. That normally comes with a big tax bill. But I always tell people when they come to me and say, JT, how do I lower my taxes? I say, hey, if you can buy one rental property a year, you will become tax-free. I can't promise you it's going to be this year. I can't promise it's going to be next year, but it will eventually happen for you. And the beauty of that is you get to lower your biggest expense, which is your taxes, but simultaneously growing your wealth. And that's really all that we want to do, right? We want to leave a legacy and grow that wealth.
What's up, guys? Welcome to another episode of Invest Iowa. Today, we're talking about tax and how buying one rental property can lower the amount of taxes than you're paying year by year. And for that, we have JT PELLS with us, who is a CPA and is ready to provide all that information, man. So thank you for coming.
No, for sure. Thanks for having me, Sebastian. I'm looking forward to it.
So what makes you prepare to have this conversation? How did you become a CPA? How does the journey start?
Yeah. So I completely fell into being a CPA. It was completely by accident. I had enough accounting courses in school. When I graduated from college, I went to be an accountant at an advertising agency. The boss there said, hey, JT, you should become a CPA. I bet you're really close. I looked it up, and sure enough, I was only like 2 or 3 classes away. And then he said, you need to do this because it's going to be better for your career. Shout out to you, Pat Romagnano, if you are listening. And then that kind of forced me down that journey, became a CPA, passed my test, started doing taxes. This has been 2012, 2013, and I've been doing them ever since. And then I started working for myself 2 years ago, so March 2021.
What was that change? How long did you work for somebody else?
It was about 7 or 8 years. So this has been 2013 to 2021. I guess I could say it now. It's been 2 years past. I actually got fired from my accounting firm here locally in Des Moines for offering competing services because I was just doing some taxes on the side, just to pay the rent, nothing crazy. And they said, hey, you're offering competing services. You could stop now. Otherwise, as they said, bad things can happen. Well, like any good entrepreneur, I didn't listen, and I kept.
You have the bug.
I kept going, and then sure enough, 2-3 weeks later, they said, "You're out, man." And then I thought, well, all right, what do I do now? Like I can go apply for another job, but then they're going to talk to my employer and say, "Why did you fire this guy in the middle of tax season?" And they're going to say, "Oh, because he's insubordinate. He didn't listen to us." So I'm like, well, not going to get a job then. And then I just said, I'm making like about $2,000 or $3,000 a month right now. Like my bills are paid. I'm fine. Let's go at this. Because before then, I had always just kind of like used it as an excuse. Like, oh, I've got work. I can't do it full time. But now I've got all the time in the world. And then luckily I was able to hit the ground running. And now we're here. Now I have 2 people that work under me. And it's pretty cool. Somehow it happened.
Great.
Yeah.
Before we start talking about the premise of this video, what is that transition like?
It was very scary when I first started. I didn't know. I'd just gotten a girlfriend at that time, and I was like, thank Bethany if you're listening, thank you. When she stuck by me, I came home and said, hey, I got fired. Like, what do we do? Or not what do we do? I was just like, let her know. And we had been together for about maybe like a year at that point, and I was like, oh, shoot, what do I do? And she was like, you got this. Like, she supported me 100%. Now my fiance as well.
Wow.
So she's been with me the whole way. I don't give her enough credit, but she's been super supportive through this.
Wow. Okay, so now that you're self-employed, you've got your own business. What are the things that you find the most common with entrepreneurs?
The biggest thing I see from them is that they make decisions quick, and they go full force. Obviously, you can run all the numbers, and I'm an accountant. I'm a numbers guy. I love to run them. But the biggest thing I see is that they take that chance. They go full force. They think about it and do it. That's the biggest thing. Everybody's got the information out there. We're all on Google. We're all on Yahoo. But it takes a certain type of gutsy person, aggressive, to really pull that trigger and become that entrepreneur. Whether you're starting an accounting firm, whether you're doing a social media agency, whether you're investing in real estate, you have to just go for it because you can overanalyze things every day. But if you can hit the ground running, that's the biggest thing, and have no fear.
Paralysis of analysis.
Exactly. You said it better than I did. Paralysis by analysis.
Yeah. So now, now that you got all the experience in the word, how are you helping people pay less taxes?
One is by working with them throughout the year. because right now we're in the middle of tax season. It's, what is it, February 23rd as we're recording this. For your taxes in 2022, it's too late, right? If you made a bunch of money, that's great. You owe a bunch of taxes. Normally what happens is when people come to me, they kind of get, as I say, kicked in the gut a little bit, and they're like, damn, I just crushed it. Now I owe $50,000. So I tell them, hey, last year you owe that money. It is what it is. But we can do these things that help you lower your taxes. There's things, like hiring your kids. That's one thing people don't do. Renting out their house to themselves, the Augusta rule. I mean, there's all these really cool things that most people don't do. And most accountants don't do it because you're only seeing your guy or gal once a year in February, March when it's too late. You need to be discussing these things in June and July because now you have time to go out, buy that property, hire your kids, hire your wife, whatever it is. So that's why I say you want to be working with your accountant throughout the year because taxes are your biggest expense.
How's that communication with clients, especially what as a business owner, what is it that you find they ask the most?
I actually think one thing they don't do is they don't know what to ask, and that's okay because we're not taught how to do taxes I didn't take a tax class. I don't think you ever did, right?
Nope.
So you just know, I get my W-2, I get my 1099, I go see my guy in March, and then I go out. So I actually get really good at knowing what to ask people. So like when I get a new client, I immediately want to see their last tax return because it just gives me some ammunition. So I know, like, okay, you have 2 kids. When I see 2 kids on a client's return, I think, okay, you need to be hiring those kids. That's $24,000 or $26,000 this year in deductions. Oh, I see you own your own house and you have a business. You need to rent that house to your business for business purposes, get tax-free income. So I see that, so most people don't know to ask that, right? They're not inherently, they don't know. So I do a really good job of drawing out, but I also ask people their goals. For instance, one good strategy is to hire your wife or spouse or husband, but not everybody wants to work with their spouse. So I'm not just going to jam it down somebody's throat and say, hey, hire your spouse and get these deductions. That's ridiculous. But so that's the kind of thing is just being proactive, I think, and knowing what to ask because most accountants don't do that.
Asking the right questions. So you can can you elaborate on hiring your kids and your spouse?
Yeah. So one thing, if you work in a business and, we're in real estate, so we'll kind of cater to the audience. If you're a realtor, right, you're showing open houses, you're going for coffee, you're doing Zoom calls, you're doing all this stuff, right? And you have kids, I'm assuming, right? Or not you specifically, but if you're a realtor, if you're out there.
Yeah.
One thing you can do, we're in this really nice studio. If I had kids, I would say, hey, their job for me is going to be to set up this studio, right? Set up these lights, set up this camera that I'm looking at, this mic. And you can pay them a rate. Because you're going to pay them an allowance anyway. It's like, well, why don't I just get a tax write-off, right? And then if you're going to go show an open house, say, hey, you're going to bring your son, your daughter, and they're going to set up the signs. They're going to greet people. They're going to, do anything like that. Just come with, like my dad did it when I was younger. He was self-employed, and I used to go to work. I didn't know that he paid me. I had no idea. But just years later, when I turned 18, I had all this retirement money. Mm-hmm. Because, it's just a little bit. It's like $3,000-$4,000 a year. It's not a lot, but it adds up.
It adds up.
Right. And obviously, I can't touch that money until I'm 65, but you get the idea.
Yeah, it sets you up to a better future.
Exactly. So yeah, that's one way as a realtor you could do that. Or even if you're an investor, you don't have to be a realtor. Going to check on your tenants. Hey, bring your kid with you. That's, he's your assistant, your shadow, your, whatever that job is. You pay him a regular wage, just like anybody else. They get a W-2. They have a job description. But you're already going to spend money on your kids. Let's just repurpose that and now get a $14,000 or $13,000 tax deduction. Right?
Wow. And that's you get to hang out with them.
Exactly. And then it's the same idea would be for your wife. It's the same idea. Now, again, if you don't like working with your wife, like I have a client, he hired his wife recently, and I'm almost like, I don't know about that. They're getting a little arguments, but you get what I'm saying. But if you guys get along well, hey, by all means, you should do it.
Right. It's strategies.
Exactly.
And everybody's different.
And that's the thing. It's a strategy because we're all paying our kids. And I always say I'm the most conservative accountant out there, right? I'm just following the IRS guidelines. It's ordinary, necessary, and reasonable to have employees under you. They just so happen to be related to you. There's nothing wrong with that. I'm not, for my clients, we're doing it by the book. We're going to have job descriptions. We're going to look up the market rate. We're going to issue a W-2 to you, W-3s, all that stuff. I'm not, money has to change hands. It goes from your business account to their personal account. Their names are on it. That's how you would do it. And obviously, there's only so much we can cover in a 20-minute podcast, but that's kind of the nuts and bolts of it.
Yeah, 100%. Now, for your typical, couple, already have a W-2, great jobs, great pay.
I'm glad you said that.
Want to get started into real estate, right? What are the benefits? How do you have that conversation with somebody like that?
So the first thing I'll ask like that, if you have a good W-2 job where you're making $500,000, don't quit that. Don't be stupid.
Okay, that's an exception. I was thinking more like 80s, like 70K, like that will be more like your basic.
Oh, I see what you're saying.
Good standing, but $500,000. Like.
Okay, I see what you're saying. So yeah, let's assume combined 150, 160.
Yes.
Good money, but not retiring anytime. So the first thing I would say, and let's say they're getting crushed by taxes, right? And they're like, damn, JT, I'm paying like 25%. Like, what do I do? And I said, well, you could donate a bunch of money to charity, but, not all of us want to do that. If you can go out and buy one real estate property per year that you're going to rent out to somebody, short or long term, doesn't matter, and you can buy one per year, obviously you want to save up the down payment. The first thing I tell people is make sure you have that 20%. That's going to be the hardest. And if you can rent out that property and write it off on your taxes, there's this depreciation or tax deduction called depreciation. It's a really magical deduction. I'm not going to go straight into it here, but you're allowed to write off the wear and tear of your house over 27 and a half years. And you get that deduction whether you make a profit or not. So I always tell people, if you can just break even on your rental property and you're at zero, right? You get a magical non-cash deduction for $5,000 or $6,000 every year.
And that depends on everybody's
size
situation.
Of the house, right? Exactly. There's other things, but let's say that, right? $5,000 is not a lot in the first year, like I said. But if you can do that the next year, maybe you get a little bit bigger house and it breaks even. Well, now we're at $20,000, and all while this house is paying for itself, the tenants are paying for it, right? Now maybe the next year, in year 3 or 4, we get a bigger house. Maybe that deduction becomes $30,000, $40,000. You see what I'm saying here?
Yes.
Now all of a sudden your income of $150,000 that you're making combined is now $100,000, but you're still making the same money, maybe even making more. And that's the magic of it. And if you can keep doing that, you will be tax-free. Now that I know there's other things, you have to be a real estate professional, but that's the gist of it. And if you can keep doing that, I promise you will eventually get there.
How do you consider someone as a real estate professional by the IRS?
By the IRS, there's a few things. One, you have to spend half of your time in real estate businesses. So like if you're a realtor, you you very easily qualify. If you're both working a W-2 job that's not real estate, it is going to be hard to qualify for that, and there are caps on it. But there is a loophole with the short-term rental. Some of us call it Airbnb, VRBO, Vasco. There's all these other ones. But that's a little bit easier. You can qualify if you can run a short-term rental where the average stay is less than 7 days. So that's really easy to qualify. That's why it's becoming really popular. Some people call it the Airbnb loophole. I call it the short-term rental loophole. But actually, loophole's not a good word. It sounds mischievous.
Yeah.
Tax advantage, I would say, tax break.
Would you say that the short-term rental tax advantage is something that is already, it's a wave that already passed by?
No. Well, yes and no. If you buy a short-term rental like we're here in Des Moines, you're the real estate expert. I'm not going to speak. Would you say that getting a short-term rental here is probably not the best idea? It's not Iowa's not very touristy. Maybe at the state fair time it is. But if you can get one in a place like Miami, actually I have a contact down there. He helps clients get into good properties that will cash flow. It's like anything. If you know what you're doing and you buy it in the right place, you know the permits, you know the zoning, you can make you can still make very good money. You have to do it in the right area though. You have to know what you're doing. So I would never recommend to somebody, hey, go out and buy an Airbnb, unbeknownst and not do anything, because you can really hurt yourself.
I see what you're saying. I see what you're saying. That absolutely makes sense. So now, with your relationship with investors, do you mostly work with real estate investors?
Yeah. So I would say probably half the client base are people that are in real estate, whether they're realtors, flippers, wholesalers, anything like that, because it's easier to qualify. And actually, I had a conversation with one of them last week. I meet with my clients either quarterly or monthly, just kind of depends. And that actually going back to it when you're saying about asking these questions, you want to be meeting regularly. So a lot of my clients
Know what they're doing.
right, and we have that like, hey, the first Friday of every month we meet for a half hour. Nothing crazy, we're not gonna, tear the walls down, but it's so I know what they're doing, and then I can tell them like, hey, if you go out and buy $120,000 property, you can save X in taxes. So like this client, he just bought a property in I think it was Oklahoma City or Tulsa, I can't remember. And I think this property, he bought it for about $80,000-$90,000, nothing crazy. He's gonna put in some improvements. But it's going to help him save like probably $40,000 in taxes this year, and the house cash flows, so it pays for itself.
Wow.
But that's all because we're meeting throughout the year, and I'm guiding him. I will never tell him don't buy this specific property, but I will say, hey, let me run the numbers, and I'll tell you if this specific one works. But I'm never going to tell you to go to a certain area. And most of the ones I work with, like they're already kind of educated, they know what to do. I will never coach somebody and like tell them which property to buy, but I will tell you the benefits of it.
Do you find yourself coaching investors?
On the tax side, more or less. I don't really, like I said, I don't really want to get involved and say this property is going to work, take out a HELOC, do all that. I'm not going to tell somebody to do that, but I will work with them and help them on the tax side. And some of the clients, they know more than me. Sometimes it sounds like they know more than me. I'm like, wow, that's a very advanced question, Adam. It's crazy that you asked that.
At what point that somebody, from your perspective, qualifies or could benefit from acquiring this type of services?
I would say anybody that's really probably over 100,000 in income, whether that's W-2, self-employed. That's when it makes sense, because really under that, you can still benefit from it, but the costs outweigh it. And especially if you're going to buy real estate, if you're making $50,000 a year, you're probably not going to qualify for a rental property. And I would never just tell you to go out and like spend all that money. But I mean, I've worked with property owners. I've worked with investors that don't make that much money, but they just save up. They know what they do. They know how to hunt for deals. They get actually, it brings another point. You don't always have to be the money. You could be the guy on the boots on the ground, and you have a buddy who you invest with, and he's the money. So you don't need to do it. You don't always have to use your own money. What is it? This is a song, but OPM, other people's money.
Other people's money.
So you can do that. I'm sure you're in a realtor. You know that. You don't always have to use your own money. You can use other people's.
Risk
and
capital.
that's a whole other conversation. But there's a lot of people that are actually, I'll give this away. If you know how to fix houses and you're good with your hands, there are so many people that have money that don't know what they're doing. But if you can spot something wrong with a house and you just know, you could partner with somebody. I know a lot of clients that do that. They don't have the money, but they have the skill set. And that's where partnerships come in. And now all of a sudden, here you are, a real estate professional, getting to deduct all these cool things, and you didn't put a dime in.
Yeah, you put just your time and your effort.
Sweat equity. And then after you get one or two, you can train somebody else to do it, and now you're the one looking for deals.
What is from your business, what is the next step after you get to the 100 plus? What's the next step that you see people going after they get rental after rental?
After that, the next thing I see is acquiring businesses. So there's a lot of businesses that are out there for sale. That's what I would say is once you're after that point and you're buying rentals, some people love it and they get addicted. Like we were talking before, it's like once you get the bug.
You get the bug.
So yeah, like once you get one, like you can get the next one. It's not as hard. It's like anything, it's starting. I would say after that, after having a lot of rentals, you could buy other businesses. You could partner with others. You could start your own thing. What I see a lot of people doing, and this is another tax play if you're really wealthy, you can actually start your own charity. Because here's the beauty of this. I'll give this one away. If I started the JT PELLS Foundation, right, and I love baseball. So if I wanted to start a charity that revolved around baseball, I can donate the money to my own charity, get a really sweet tax deduction, all while the money is still controlled by me. It's just controlled by another company. And since I like baseball, I can, start a YouTube channel that's a nonprofit that promotes baseball. Shout out Eric Sim if you're watching this or listening. I've got a lot of tax. He's a celebrity baseball player, but he's pretty popular. But that would be one as the private foundation.
Oh, I see what you're saying.
You're donating the money to your own property, your own foundation, getting all the tax savings, but then also getting some really cool things that you like. I have a client or a mutual client with somebody. They started I think it was like Coffee and Cars. It's a private foundation, and they ride around in really luxurious cars, Lambos, Porsches, probably Teslas are in there, and they get to write all that off as their nonprofit. Now, there's more to it than that. It's not. They're actually giving back to the community. I don't want them to make it sound like they're not.
Because the way you said it,
Right.
it sounded kind of
It's
weird.
So what they do, they help kids. They introduce kids like basically how to be mechanics.
Oh, okay.
But they just happen to have luxury cars, and it's just really cool because they grew up around. They love cars, so that's how it works out. But they're buying the cars. It's a tax deduction. There's a whole thing into it. But that's the next play I would say is private foundations is a really good one because you get to build, like we were talking about with homes, you get to build a legacy. I think I heard Grant Cardone say when he started Cardone Capital, he wanted to build something that would be there even after he's gone. So that's the next thing that you want to do because it's cool to have all the money in the world, have all these properties, but if you can build a foundation that that is still here when you're gone, that's real power.
What are some, from a tax purpose, what are 3 things that you will advise people starting now
Yeah.
to do? Right out of college,
Yep.
have no idea what taxes are because my
Yeah.
parents have done it the entire time. Is this something that I need to start to worry about once I start making money, or when should I start looking for taxes?
If you're just working for yourself or working for somebody else, you don't really have to worry about it because they withhold the taxes. There's not really, the IRS tax code is written for entrepreneurs, investors, business owners. If you're just starting out, the number one thing I would say as a self-employed person, immediately get a separate bank account. And that's just going to be your business account. Everything that comes in, business income goes in there. Every business expense goes out of there. That'd be number one. Number 2, I would focus on making money because if you're not making any money, you're not paying taxes, but we want to be making money. And then
Paying taxes is a good problem to have.
it's a good problem to have because, yeah, if you're only making like $5,000 a year from your side hustle, like, don't even worry about it. Like, taxes are you have a cash flow problem. But once you have a cash flow and you're making $100,000, I would say, and after you have that separate business bank account, you have the QuickBooks set up, from there, I would say the next thing that you want to do is invest in not necessarily an accountant, but a tax strategist, tax advisor where you're meeting with. Because I will tell you this, I always tell my clients, my goal is to save you more money than I cost. And if I save you or help you make money more than I cost, it's free.
And it's free.
What's there even to think about?
Yeah.
It's on average, with the clients I work with, I mean, I'm helping them save $40,000, $50,000, $60,000 a year, and I charge less than that. So that's, to me, it's
a
sales
win-win.
right there. Yeah, there's not even at that point what is there to think about?
No, I don't think there's ever an accountant that is going to go that high on the rate.
There's not that many. I've worked with, obviously I've worked in accounting for years, and I never met an accountant that was proactive like this until I met, he's an enrolled agent. It's like a CPA, but a little bit different license. Carlton Dennis, he's a mentor of mine. That dude is the truth. I'll have to share this with him because I think I'm talking to him next week. But he was the first one that I saw, like, he was on YouTube, on Instagram, telling people, like, hey, if you travel this way, you can write it off. And I'm thinking, yeah, I know this. Why am I not telling people this? Like, he wasn't saying anything I didn't know. He was just repurposing it. And then I started working with him last year, joined his mentorship group, and it was the best decision I ever made. And he's kind of the one that spearheaded this. Or maybe it was 2 years ago now, whenever it was. But yeah, he's the one that I saw, and I was like, I know what he's saying. He's not saying anything I don't know already.
You just don't offer it to people. And people don't know.
And most people don't. And every person I talk to, they always tell me, whether they work with me or not, they're like, I've never heard an accountant ask me any of those questions before. They just ask, like, hey, how many W-2s do you have? Do you have a business? And they just put numbers in the boxes. To me, putting numbers in the boxes, that's the easy part. Anybody can do that. Everybody knows wages go on line 7. Easy.
Go to TurboTax for that.
Go to TurboTax, exactly. But I want to help you because I want to help you feel secure because taxes are, like you said, it can be scary for people. And me and my team, like we specialize in hand holding. We want to take all the deliberation out of it for you. We want to be quarterbacking you. You're the receiver. We're the quarterback. We just tell you what to do tax-wise, where when most people go to their accountant, it's the other way around. The accountant's asking like, oh, what do you want to do? And it's like, I don't know. I'm not an accountant. Why don't you tell me what to do?
Yeah.
And it just ends up becoming this song and dance that both people don't do anything, and now you owe taxes.
Let me talk about three main things that you see that you will want to see more in people that want to start to become a CPA.
CPA, you need a degree to do this, but you need a degree to be a CPA. I see your girlfriend in the background. I know she's a CPA in training. But the biggest thing is it's good to have all the technical knowledge. Like, you need to be technically sound. I'm not saying not to. But in school, they don't teach you to think forward. Like I said, when I look at a return and I see 2 kids, I don't think, oh, that's great, 2 kids. I think that's $26,000 in tax deductions that we're not doing. Okay, I see you have a business. Like, you want to be thinking of these things, and you want to be asking. Like, if I don't see an apartment number on the home, on the address, I think, okay, they own their home. That means they can rent their house out 14 times a year, the Augusta rule, all these things. So I want to be thinking ahead, and I want to be telling the clients what to do. Of course, I ask them what their goals are, because some clients don't want to invest in real estate. And I'm never going to advise somebody to invest in real estate if they don't want to, because it takes a special type of person to do that.
Wow.
But, yeah, but to get back to the kids, sorry, or if you're in school, learn the technical stuff, but really study people out there that are where you want to be. Like, find a mentor, whether it doesn't have to be me, it doesn't have to be Carlton Dennis or Chloe, Carter Cofield or any of the people out there, but just watch them. We're all on social media. You can see what we're saying, and I guarantee that most CPAs out there, everything that I'm telling clients to do on this, you know that. Like, I'm not saying anything that most CPAs don't know. So if you're out there, and even if you're a potential client, ask your CPAs, like, hey, do we meet during the year? Could you tell me what I owe in June if the year were to end? And if the answer is no, you need to find somebody else, because you want to find somebody that's going to work for you, not just be your employee.
I see what you're saying.
Yeah.
Yeah, that's a good way to
Yeah.
start. How can people reach out to you if they have any questions, any information they want to learn more about your business?
I would say the best way to kind of reach out is on Instagram. I don't like giving out my number or email on there, but you can go to my website. It's jtpells.com, or my Instagram is my last name, so at PELLS CPA. So that's that. There's daily reels that come out, and yeah, we'll help you out. We are taking new clients on right now, even though it's middle of tax season. Can't guarantee I can save you on taxes last year, because that happened. But if you're tired of paying taxes or want to know a way out of the rat race, hit me up.
All right, that will wrap it up. Thank you guys for watching this video. If you made it this far, I'll suggest you subscribe and hit the like button. It always helps us, and I'll see you on the next one.